Hey guys, welcome back. Today I'll be going over a way to make money while sitting on your hands. It involves Tesla and its put options. I'm sure you've seen some short put strategies out there, but this is a slight variation. It'll minimize the risk and it'll make it easy to incorporate into your portfolio, whether or not you think Tesla share price is going to the moon or not. But first, let's cover the news of the day for Tesla. It's 5-for-1 stock split. It really comes as no surprise. People were anticipating this. And in actuality, nothing has really changed. In case you're not familiar with a stock split, in this case for Tesla, if you owned 1 share of Tesla stock, you would get 5 shares now. But each share would be worth 1/5 of what it was before. Therefore, in total, your total value of your Tesla ownership has not changed. So people out there would argue that by reducing the share price for each share, that it would encourage more people to invest in Tesla, thereby driving up the price. However, you can also argue that fractional investing was already available, as a lot of different brokerages offer that. And also, a lower share price could encourage new people to short the stock. So with the stock being up $50 in after hours trading on Tuesday, I wouldn't chase at this point. In fact, there's a more fundamental event coming up, and that's Tesla's potential inclusion into the S&P. The announcement is expected to come any day, but I believe a delay may be due to Tesla preparing for a stock offering, and that would actually be much different from a stock split. In a stock offering, additional shares are made available to the public, and current shareholders are diluted. So the near-term impact of a stock offering is always to drive the stock price down. But in this case, I would expect the share price to recover quickly, as Tesla is most likely doing a stock offering to help institutions with liquidity so that they can invest in Tesla stock for their ETFs. Therefore, a stock offering will probably be followed by the announcement that Tesla will be included in the S&P. How would you play this? How would I play this? I would wait for the announcement of the offering if it ever does come, and then wait for the pricing of the offering. And at that point, I would invest in Tesla. So let's get back to the part where we make money sitting on our hands. How do we do this? Well, we can do this through selling naked puts or shorting puts of Tesla. This could be risky, but for those that have seen my other videos, I advocate stress-free trading. I don't want to lose sleep on anything, especially related to my investments. So let's go over first what shorting a put is. So let's assume Tesla has an August 1200 strike put option trading for $5. If we were to short or sell that put option, we would receive $500 right off the bat. It's yours to keep no matter what happens. Assume anything that happens afterward is a separate transaction. If at expiration Tesla's share price is above 1200, the put option would expire worthless and you would have no further obligation. But if the price went below 1200, you would start incurring a loss, and they could get bigger the further it dips. So you might be thinking, how is this a good risk reward? Well, you have to remember that there's a probability factor. Could the share price drop from $14.50 to $1,200 in 2 weeks? Probably not. Could it go down to 1,000 or 800? It's not likely. So you have to take into account the probability when you look at the prices of these put options. And you also might want to think about, hey, would I be okay owning Tesla shares at 800, at 650? So let's look at some live quotes from a screen capture on Tuesday. You'll notice right away that the Tesla puts and calls have very high premiums. If you go over to the September 18th expiration, you'll see that even the 700 and 800 puts trade for about $2 or higher. And if you go over to the October expiration, which is what I'm interested in, the 600 and 650 puts, and keep in mind that's about $800 away from the current price. Even those are trading at $4 and above, up to $6 and change. I also like to think about what major news events could take place between now and expiration. We've already talked about the S&P inclusion. Another event that could take place or will take place is the Battery Day presentation. I think both will be positive, so I'm not too worried about those events driving the stock price down. And earnings is scheduled for October 21st, which is after the expiration. So who will benefit from these types of trades? I would argue that a lot of people could benefit from this, and it would definitely make the most sense for people with a lot of cash on the sidelines. Maybe because they think the market's close to a top, or they're just not sure of what to invest in at the moment. This is a way to park your cash into something that earns a pretty good rate of return for a very low amount of risk. So, did I take a trade? Well, I didn't take the October puts, but I plan on doing so soon. What I did do was look at the current week expiration, August 14th, and saw that the 1,000 strike price put was selling for 50 cents. You might be thinking 50 cents is not a lot, but it's also not a lot of risk. Will Tesla drop $450 in the span of 3 days? I doubt it, and if it did, I probably would want to purchase it. Let's briefly go over the margin requirements. For cash accounts, you need to enter into a cash secured put. And that means you need to have 100% of the value, assuming you bought the shares at the strike price. So for the October 650 puts, you would need 650 times 100, which is $65,000. For margin accounts, that drops to 20%, assuming your strike price is way out of the money, meaning the share price is way above the strike price. I would strongly advise that you don't overstretch yourself and get too close to that 20% requirement, because you'll need to maintain that 20% throughout the time you hold the position. Okay, that wraps up what I wanted to share related to shorting way out of the money put options on Tesla. I haven't seen that covered anywhere else. Let me know if you've seen it elsewhere, and also let me know what you think. As you know, I like to follow up on my open trades and strategies. For my last video, I had an open trade on DraftKings, a spread trade that I planned on adding to if given the chance. But depending on how you look at it, the share price went up, and so I wasn't able to add to my position. As noted in my previous video, on Tuesday evening, NASDAQ would release new short information data, and I was expecting an uptick, but it did not increase as much as I thought it would. I'm guessing it's because the data is as of July 31st, and many more shares were shorted afterward. But without that data, I don't want to add to my position. I would prefer more shares to be shorted because they would be built-in buyers in case there was some unexpected good news from the earnings report or between now and the earnings report. Given this, I'll just hold on to my one position and ride it out through earnings. For my next video, I have some ideas, but if I enter into the Tesla October put, I'll let you know, and I'll document it in the video. I know I went through a lot, but hopefully you got something out of it and learned something new. As always, let me know if you have any questions, and if you liked the video, please click the like button and subscribe. Thank you.